Ready. So tonight is the Power Hour Powerhouse Supercharging Your Trading webinar. And I will be sharing my secrets on just trading the Power Hour. Basically, it's just about an hour a day, but that doesn't mean that I'm in a trade for 1 hour. It just means that this is my focus time every single day. I'm probably in the market with active trades between, let's say, 15 minutes and 20 minutes at a time. So just want to welcome again, everybody. My name is Anka Metcalf. I see a lot of new faces in here today. I am the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and actively invest into the market. And also, I do have 2 programs, hand-holding programs that are going to not only teach you how to earn while you learn, but it's going to grow your portfolio. I have been a professional independent trader for more than 20 years. Prior to this, I come with 10+ years in investment banking, and I am an expert in high velocity trading. Today, we will be talking a little bit about velocity trading because I do want to share some charts with you guys tonight. I'm also the designer of an institutional proprietary trading system. And the reason I'm the designer is because I cannot say that I'm the creator or inventor of technical analysis, but I do focus on price support resistance and also on the 8 layers of price support resistance. So not just supply and demand. I focus on specific trigger times because I've been trading so long and I have been in the market for such a long time. I have developed my own proprietary trigger times into the market. I have noticed that at some trades that I would place in the morning, and especially in the morning, but they are repetitive in the afternoon session as well. I've noticed that there are some times in the market that work better than others. And I noticed as well that sometimes I would have a really phenomenal setup, textbook setup per se, and I would take the trade and shortly after I would stop out. And a lot of times you can even hear this on TV, you hear it on CNBC, you hear it on Bloomberg, about the timing of the day. So the timing was not right. The timing was off. The timing did this. The timing did that. So this is exactly what I'm referring, because there are times where trades work better than other times. Also, specific price zones. I don't know if you are aware, but there are 4 price points through charts and that are, let's say, encompassed in price. And they actually tell us where the institutions are legging in or legging out. And also chart synchronicity and divergency is very important, because if you're a futures trader or even if you're a stock trader, it is very important to monitor the market internals, where the cues are at, the progression of the cues, the structure of cues, the same for the SPYs, the diamonds, and Russell. And of course, it's really easy. It's like throwing darts or fishing in a barrel when everything is in sync, when you have some external catalyst that is impacting the market and is creating the trajectory of the market either higher or lower. But when you're getting divergence in the market, that is a little bit rougher to trade. And that is when tons of stop outs occur within that period of time. For those of you that are, again, new to Trade Out Loud, you can find more information about who we are and what we do, our programs at TradeOutLoud.com. You could also follow us on Facebook, on X, on YouTube, and on LinkedIn. On X, I do post, a lot of market structure levels, also a lot of swing trading ideas with levels and insights. So feel free to follow me over there. In tonight's presentation, we will talk about the most important times to take these high odds trades that have the power to follow through, because it's all about the follow through. It's all about the capability of price to achieve target or targets. We're also going to talk about risk, because it's very important to understand the concept of risk. And why do we need to use the same risk on all of our trades? And that doesn't mean that we're going to allocate let's say a certain amount of money on each and every single day. And when we run out of that specific amount, we're going to stop out of the trade. No, this is through position sizing, because this is the only concept that if you understand it, you could actually, have a very poor performance. And I wouldn't say like a very, very poor performance, but you can be right only 40% of the time, and you can still grow your account. So it's that important. Also, we're going to talk about charting, plotting a trade. I'm going to share some charts with you guys, and we're going to talk about the advantages of trading futures versus stocks, because it's very important. I have been a stock trader for more than 20 years, 25 years to be exact. And that is a day trader for 25 years. However, I have made the switch about 8 years, 10 years ago to futures trading. And this is because of my advisor that had a meeting with me and said, there are other options other than day trading stocks, because back then when I was trading, the commissions were still very high in stock trading, and plus I would have tons of taxes, where when you're trading futures, you could actually, this is free information, you could actually find it on the internet, just search on your choice of engine the advantages of trading futures, tax advantages for futures. This is what you need to look for, and you're going to find tons of advantages. I'm going to share with you some advantages of trading futures that are outside of the CPA domain, but definitely you could find more information on the World Wide Web. We're also going to be discussing time frames that deliver the best results, because oftentimes I get a lot of questions in regards to my favorite time frame. And I'm going to be very honest, I don't have a favorite time frame. I actually trade on the time frame where the pattern is lining up in a clear way, and where it could transition further to a target that would accommodate at least 2 to 3 hours for my trade. Because you know how it is. Sometimes you plot the trade, you have your entry, you have your stop, your position sizing, right? Because the difference between the entry and the stop is going to provide you the risk. And then you're seeing that the chart has a tradable void to achieve at least 2 or 3 Rs, but then something happens in the market, or there's a rumor in the market, or there's definitely something really happening in the market, and the price action is stalling and it's not really progressing. So it's fine if at some point in time you're going to get 1 hour or less than 1 hour from a trade, or actually put the stop at a break even, because it's better than taking a loss. So my goal for you tonight is to understand the process. What do we do? What is the procedure? We're going to jump right into charts. I took this image yesterday and I left it here, and we're going to do a parallel between this image and where the market is right now. So for example, yesterday when I took this image, you could see here, and this is, by the way, this is NASDAQ. It doesn't matter. It could be S&P very well. It could be the Dow, but NASDAQ had a gorgeous extension higher above the prior high here, respecting the massive power trend that is in place right now. And it is basically running into an extension higher. So it does have a lot of room for the upside. It's trading at all-time highs. We didn't have, I think, all-time highs today. We're going to take a look at a chart in a few seconds. However, it is trading into the tradable void. A lot of times when this happens, there are so many traders out there that, become very cocky, and they say, okay, it's trading into all-time highs. Is it a time to short? So by these traders shorting the market, they actually produce the rippage to the upside. Why? Because these traders are going to take the short side of the trade. So they want to, let's say, short into these highs, or short anywhere within the price range of this candle, and they're going to place the stop just above the high. Now, if the market is going to have another surge higher, then they're going to be stopping out. Them stopping out is going to create that power and move to the upside, and it's just, the market is just going to power higher and higher and higher. So this is the reason why we always need to be on the right side of the trade. So that means unless we have a real reason to short the market, we're going to remain long, and we're going to apply strategies that are in sync with the momentum for higher. So you're going to apply any kind of strategy, any kind of pullback buy, any kind of base breakout, or whatever strategy to the upside, and shorting is not going to be an option. And when the market is extended, for example, here, you can see that we have 4 bars to the upside from this breakout, from the sandwich breakout. Typically, the market has the tendency to continue higher for 3, 5, and 8 candles to the upside. So currently we have 4 candles here. Typically, we need to see at least 3, 5, and 8. And you're going to be asking me, like, why 3, 5, and 8? Because these are fib numbers. So if you know how to count to 3, then you know that after 3 bars, if the momentum is going to stall, if you're seeing that you're going to get some kind of a doji action, there's the likelihood that the market will start pulling back. The same effect happens after 5. You know how to count to 5? 1, 2, 3, 4, 5. Currently, we have just 4 candles here. But if we had another one, then you could expect and be on guard for that pullback. So if you want to always be on the right side of the trade, because this is what it's all about. Many traders that start trading are caught on the wrong side of the trade, and they're taught strategies that are completely wrong. Like, look for extensions, look for this, when is trading into all-time high, when is trading with this, or when a very small time frame, like a 1 minute or 2 minute, is crossing over some moving averages, you have to think short. And that's not the case when it comes to professional trading, because that does not apply into the market. And looking at the market and I use some indicators. You guys can see that I have some moving averages here. However, the most important thing that I watch is not the moving averages, and I'm not watching the moving averages. I'm watching price action itself, because everything that is on this chart right now is basically a lagging indicator. Whether you're having the moving averages, whether you're having anything else on your technical chart that you prefer to trade with, is lagging. Stochastic are lagging, RSIs are everything is lagging. The only non-lagging element right here is literally the price action itself. So I'm going to go right now exactly into a chart. And do you guys have any preference? Do you guys want to see an S&P chart? Do you guys want to see a NASDAQ chart? Do you have any preference? Just please type it in here, because I don't have any preference. So just want to accommodate your wishes as well. Okay, Tim is saying he wants YM. Here we go. We're going to go to YM right now and start analyzing YM. Perfect. K, NASDAQ. Well, Tim was the first one that said YM. So we're going to resume to this because we have a lot to talk about tonight, but I wanted to include this. First of all, anybody has any doubt that this is a monster uptrend, right? So we have the higher highs, we have the higher lows. We could see that at multiple times throughout the chart. We have developed some minor support levels that are incredibly important. You can see here that we have 2 peaks, and when the price action broke through these 2 pivot highs, it stabilized, right? So it stabilized. It came very, very, very shallowly, let's say, if that is even a word, but it came in a very slow manner to revisit the prior high zone. So remember, when we're talking about support resistance, is not the exact number. So the fact that, for example, we have a high here at 711, for example, doesn't mean that 711 is the absolute support. It is the area around it. You guys know that. So here we had a sideways range. We popped a little bit higher, but when we came back, because here we had a very shallow pullback, when we came back here, we came to visit these prior 2 peak highs, right? These prior pivot highs. And then we rotate again. We crushed it to the upside. And then when we pulled back, you could see here that we revisited this prior high support zone from which we launched higher. This is a characteristic. These pullbacks that are happening into the prior highs are characteristics of very strong, incredibly strong uptrends. And from this point on, the price action started to move. Once it took out the prior high, it started to move higher. And it started to move a lot higher. And you can see the extension here. We have, look at the green candles, because this is very important and makes a great point of what I was mentioning earlier. We have the 1, 2, 3, 4, 5, 6 bar pullback. We have the rotation bottoming tail suggesting into minor support that buyers are coming in. We had an inside bar, and this means that the price action was compressing. And then we have the trigger that smashed, that crushed it to the upside. We had huge launching bars, and we had 1, 2, 3, 4, and this is the 5th bar right here. So after the 5 bar, what do we expect, team? What did I say earlier? I said that we are expecting either a pullback, right? Because if you know how to count to 3, 5, and 8, then you know when these pullbacks can occur. So we are expecting either a pullback or a base, because the price action needs to build a foundation. You cannot build anything without a foundation. Think about building a house, right? You can't just put the house and start building the walls on the ground, right? You need to dig. You need to have that basement done, or you need to have a foundation. You need to have something that is going to support your house, right? Or your skyscraper. So it's just like an architectural piece. So therefore, we are basing in here. And a lot of times, you know, and by the way, we're basing into where? All-time highs, right? Because we are just punching and we are revisiting these all-time highs. And we have been doing that for 1, 2, 3, 4, 5, 6, 7. And today is the 8th day that we're right into support. So what does that mean? For us as traders, any kind of price base, any kind of price range into the all-time high, it shows that the price action is not giving up. It shows that institutions are still committed to staying into the trade. And this is a very important factor. They're not selling. Oh, if the price action is going to break below the base, short-term shorting is possible on an intraday level, but not on a swing level, right? Because you're waiting for the pullback. This is a swing level right here that we mentioned in our trading room. And this is this is actually where I bought the Qs, and I bought the SPYs into our swing program. Okay, so on this pullback right here that occurred towards the end of November. And where are we right now? Why are we basing here into the all-time highs? Now, I did a quick projection because whenever I'm trading into all-time highs, I want to make sure that I am identifying resistance areas that are invisible and most often go undetected. So I'm using my Fibonacci projection, and I have projected these targets for me because these are levels at which institutional traders pay attention to. And the reason why we stalled into this formation is because we have reached the 1.272 resistance, which is right here. You can see the price where it's coiling at around the 69. So basically it's around the whole number 45,100. And this is exactly where the price is at, because the price has been moving around this 100 and testing the 100 and back and 100 and back, 100 and back. Okay, now what is the volume telling us? Because you guys could see that we are using volume as well, and I'm using volume in the sense of participation. So I want to know, like, what is the participation here? And by the way, notice how yesterday we had very low volume into the market, and we had a move higher on very low volume. Be very careful when that's happening, because that could be very deceiving. Institutions often do the punch higher and then they short, or the punch lower and they start buying. It's called the forced sell or the forced buy. And that is how they accumulate a lot of the contracts that are, basically with algos or retail traders or what have you. So bottom line is that Once we trade above the base high, we will start continuing higher to the next level, which is the 1.618, which would be into the 45,600. So this is a quite wide tradable void right here. But how do we know, and what does what is determined whether the price, who determines whether the price is going to go up or down? Because a lot of traders will go like, yeah, I'm going to go higher, or I'm going to go lower, or I'm just going to leg in here around this range. And I don't do that, because I wait for confirmation either the top of the range or the bottom of the range. Because if I would, let's say, go long here, where the price is trading out right now, this time at 7:21 p.m. Eastern, that would put me in a situation of a 50-50 win, or 50% win or 50% loss. And I don't deal with 50%. 50% doesn't cut it. I need to have the odds stocked in my favor. So then what I do is I look at the economical data, I look at the economic calendar, and I try to find a catalyst, and I try to see if the market is waiting for that specific catalyst. Okay, so that is very important. Okay, but definitely you can see that as long as the price action is going to stay above this prior pivot high or around that area, the price action is going to be very solid, and it's going to be very, very strong. So I just wanted to make this analogy because I have been, okay. All right. I wanted to make this analogy because it's very important to discuss real-time data and to discuss what is happening in the market right now. Okay. All right, so we're going to talk a little bit about time frames as well. And first things first, let's eliminate the doldrums, right? Doldrums are a very dangerous spot, especially if you're a beginner trader, whether you're trading stocks or whether you're trading futures or ETFs or whatever you may be trading. These are a little bit difficult to trade. I tend to stay away. It wasn't always the case. I have been trading the doldrums for more than 15 years. However, lately I'm trying to stay away. I'm taking time away from the market, which is very healthy, and you should do this as well. Take time away from the market around lunchtime. Go for a walk, refresh, because your brain is going to work so much better after you do that. I learned that the hard way. And of course, your body's going to start aching. You're going to, start tossing and turning in your chair, and that's not going to be a great idea. I want to get this doldrums out of the way, and then we can discuss other time frames. So within the doldrum period, if you happen to be in a trade, zoom out to a higher time frame that will allow you to use a better support or a better resistance for your trading decisions. Because oftentimes, the 15-minute time frame is even that becomes very fleecy and very flaky. The volume is literally moving outside of the market. You're not going to get the same involvement in the market that you're getting in the morning, for example, in the power hour. And we're here to talk about the power hour, right? And what time frames do we need to use in the power hour? So keep that in mind. If you're not in a trade that has, because sometimes you're, and it happened to me last week, I believe, or even this week. So for example, you're in a trade, right? And the trade doesn't evolve. It doesn't go anywhere, or it triggers and you're a sitting duck. Always zoom out. And a 15-minute, you find that the 15-minute is too noisy, just shift to the 30-minute or the 1 hour or even to the 4 hour. And that's going to give you a much clearer image. The 2-minute and the 5-minute time frames are used for the power hour. I would say, yeah, you could look at the 1 minute. I look at the 1 minute for price action to get a better idea, to get a better gauge of how the price action is progressing. But typically when I try to find setups for the power hour, I look at the 2-minute and the 5-minute, mostly on the 5-minute, especially in a day like today, because you want to make sure that you have that extra layer of confirmation from a higher time frame. So basically, when you're talking about trading, you're talking about winning more times than you lose, right? So you're talking about having the higher odds in your favor. And that's why it's so important that you need to have those odds in your favor and not just 50-50, right? You need to have at least 70%, 80%, 90%. And when you have those odds, your account is going to grow. Position sizing is also going to determine the growth of your account. You're not going to see this curve that is literally ascending higher, it's uptrending, right? So your P&L needs to be uptrending as well, right? Not only the market. So you don't want to see your P&L downtrending. Your P&L is going to downtrend, number one, if you do not know what you're doing, or you have an idea what you were doing, but you don't know how to position size. Remember, 40% of the time, if you're right, by respecting position sizing and having really solid money management, a really solid money management system, you're going to grow your account, guaranteed. You have to have that good, precise, clean execution, flawless execution. Wait for the setup to form. Don't get prematurely in a trade, because remember, you need that confirmation. You need the odds to stack up in your favor. You need some confirmation levels in your charts, and you need the trigger points. And if you don't have the trigger points, then you don't have the trade. And then of course, analysis. Analysis is very important. And I know there are so many day traders in here, and this is mostly super important for day traders, because swing traders, they only have 2 or 3 time frames to focus on, but we actually focus on 7 time frames as day traders. So we have more work, right? And this is very important. What I'm about to tell you is that you need to have all those time frames on one single screen on your computer, so you can see the price, where it's going, where it's at the same time on multiple time frames. You need to see when the 1 minute is triggering, and then you're seeing the 2 minute triggering, then you're seeing the 5 minute triggering, and so on. You need to see what's happening on multi time frames. A lot of times traders do not find targets, or cannot find support, cannot find where to place or stop, cannot find entry zones, and that is because, or confirmation zones, or time frames that need to be in sync, for example, like the 15-minute and the 30-minute and the 1 hour. So when you have that screen, you're able to acknowledge everything. This is the picture, an image from my account. I'm actually missing 2 months. The cumulative returns are a little bit bigger than this. However, I wanted to show you this so you can understand how position sizing is affecting and how quickly you can grow your account. This is more than doubling my account. Into the end of the year, we still have 4 weeks left, and I plan on working very hard, because December is a very generous month for trading in general. You have the volume, you have the price action, you have the window dressing effect, you have a lot of elements that are contributing to a possible continuation into the market higher. Easier to trade in December than any other month of the year. So what is day trading? Why do I love day trading? Day trading is my income, is literally my income style of living, my income trading. Day trading is income trading. It is that instant gratification. And I admit, it's not every day. It's not going to be an instant gratification every day, because some days you lose, some days you win. But the overall, when you draw a line, for example, at the end of the quarter, because remember, you do not judge your trading just by 1 month. You need to go through a quarterly cycle, because within the quarterly cycle, you're going to have different market conditions. And the way you trade at the beginning of the month is going to be different the way you trade in the middle of the month, and definitely very different than you trade towards the end, the end of the cycle, within those 3-month cycles. So at the end of the quarter, you evaluate and you see what worked for you, what didn't work for you, eliminate immediately what did not work for you. Have a really good journaling system. You have software out there right now that could do it for you, and you could put a lot of notes in there, or you could do it manually. It's up to you how you have it, but you need to have a trading journal. There are some things that you cannot do without. First of all is the journaling, and number 2, because you need to auto-identify what you're doing good and what you're doing right, what you're doing good and what you're not good at. Eliminate what's not making you money, and just stick with the strategies that are making you money. And like I said, at the end of the quarter, you can do an evaluation, for example, by month, but it's not going to tell you much about your performance, about your style, and about how the market responded and how your strategies responded to the market. And this is how you trade your way to wealth. Day trading is what created the wealth for me, is what created what I have right now into my investing account, what I have right now, other investments that I have. So it's definitely, whether you're doing, you're trying to generate income or supplement your income, this is the way to go. This is how it worked for me. So when I first started day trading, I quit my job. I know I shouldn't have, because a lot of people, and this doesn't work for everybody, but this was my decision. I had my emergency fund for about 8 months. I had some money, not a lot, that were set aside into a swing trading account. Basically, it was mostly investing, and I pulled all the money out and I put everything into my day trading. I invested a lot into my trading education, like literally a lot. Like, I'm not even gonna say here, it's like 6 figures into my trading education. And looking back now, and I'm asking myself, like, was it worth it? And my answer is, why didn't I do this sooner? Okay, so I'm telling you guys, it was, for me, at least, it was fully worth it. So let's talk about risk. Risk is the R. R is also risk, and R is also reward. But the most important thing is the risk that you guys are applying, the risk that we're applying for every single trade. So a lot of times I get, I get questions like, isn't trading risky? Isn't day trading risky or riskier than swing trading? Or isn't day trading risky and we should stay out of it? We hear a lot of stories about algorithms, about this and that. And I agree, algorithms, represent about 87% of the market volume. But I'm going to ask you here. So if you drink a glass of water, aren't you afraid that you're going to be choking? If you're crossing the street, aren't you scared that some car is going to come out of nowhere and hit you? You're assuming the risk. So you're drinking carefully, you're eating carefully, you're not inhaling and, jumping up and down when you're eating or drinking. When you're crossing the street, you're looking left and right, you're making sure that there aren't any vehicles that are approaching, right? The same thing with trading, you're protecting yourself, right? So the R, think about risk as your protection, okay? So it's all about calculated risk. And I know that what I'm about to say, some of you may say like, oh my God, this is crazy. That's the craziest concept that I have heard, and you're not going to hear it anywhere else. What I'm talking about is having consistency in your losses. Crazy, right? Having consistency in your losses, because the winners are going to take care of themselves. So what does that mean? You're going to have to risk the same amount on each and every single trade, and you're going to have to position size for that. But let's begin with this. Risk is correlated to your account size. So everybody's risk in here is different. It's not only based upon tolerance, but it's also based on your account size. So if I have an account size that is, let's say $100,000, then my risk per trade is going to be $1,000 per trade. I typically risk no more than 1% per trade. I run the trading room. I don't risk more. I'm not into the 2%. I'm only risking 1%. And the account growth that you guys saw, and that I showed you, the slide represents 1% on each and every single trade. Now that we have this set amount, we need to figure out how many contracts or shares, if you're trading stocks, we can take the trade with, right? So how many? And for this, we provide our traders with a calculator, okay? And we provide them with a calculator. So for example, let's say that we have, I'm using, like I said, $500,000 account I have. And by the way, if you're thinking like, oh my God, I wish I had $500 just like her. There are ways in which you could actually trade a $500,000 account. There are proprietary firms out there that are ready and willing to give the cash to trade, but first you can prove how you have to prove that you can trade, right? Because they're not going to give their money, and we actually provide traders with money as well. And we have a big surprise coming in January, so that remains to be announced. But for example, if you're looking at a chart, let's say in the Dow, and you're going, let's say on a 5-minute chart, and we're going here, and you go like, okay, so what do we do here? Okay, so we have a little bit of a downtrend. We know that we're approaching support, but let's say we want to take it long, let's say here into the 850, and we want to place a stop, let's say below this double bottom support, right? So okay, wrong tool. All right, let's say we want to go, okay, here it is. We want to put the stop over here. Okay, so what you need to do is you take your calculator and you go like 849, let's say like 849 minus 829, right? 829. And you're going to get 20, right? So this is a 20-point setup. It's going to be bullish above or bearish below. You could actually take a long for, like say, for example, over 850 or short below 829. So basically it's 20 points. Now, what you do right now is you go to your calculator and you go like, okay, because you want to risk only 1%. You guys can see it right here. It's only 1%. So if I have 20 points and if I have it in the Dow and if you have the cash available in your account, you could actually trade with 50 contracts. Okay, and that's how you get to trade. So you get to take the trade, let's say with 50 contracts, or like I said, depending on your account size. Let's say you have a smaller account size and you can only risk, let's say $500, right? And you can see here that there's, it's going to be totally different, and you can take the trade with 5 contracts. So it's definitely much different, right? So this is what I mean by that. You need to know exactly what your size is so you can have the same amount. So you're not all over the place, right? Sometimes you're going to lose 1,000 on a trade because the points are going to be different. Sometimes you're not going to get only 20 points. Sometimes you're going to get 120 points. So imagine if you lose 120 points, right? Because fine if you use 20 points, but if you have a setup that is going to use 120 points, and that is multiplied by 5, if you're trading the Dow, that's going to be a $600 loss, right? Versus a $20 loss, right? I'm sorry, versus a 20-point loss that is actually going to be $100 loss. So sometimes you can have $1,000 loss, sometimes you can have a $600 loss, sometimes you can have $100 loss. Again, keep it in check. The only variable side here is actually the size of the contract. So sometimes you're going to take with 5 contracts, sometimes with 7, sometimes with 10 or 20 or whatever. Now, another very important element is deciding how many trades you will trade per day. So now that you know your risk size, based on your account size, now you want to know, okay, how many trades am I going to risk per day? How many? Am I going to take 3, 5, 8? I mean, how many? And you need to decide that number. And that number is not going to represent the mandatory number of trades that you're going to take every day. It's going to represent an allowance. But if the market is not friendly and if you don't have the proper market environment, you have the option not to take any kind of trades. Okay, so today, for example, I took a trade and I had a loss. But that didn't mean that I allow myself usually about 5 trades every single day, but that doesn't mean that I put on 5 trades. I'm not compulsive, because if I don't see the market conditions, then I don't take the trades. Sometimes I do take 5 trades, but sometimes, for example, yesterday I didn't take any trades. Okay, so risk to reward is very important because you need to determine not only the size, but also the reward, right? Because if you're risking $500 here, you want to make sure that you have double or triple your reward. So the chart needs to represent the tradable void area in which the price action can travel. Same here. Your entry is here, your stop is here. This is a 3-bar pullback into support. We have the rising 10 exponential moving average. We have the rotation point right here for the entry. We have the pivotal low for the stop, and we have the pre-planned exit from our targets. And you can see here that price went higher and then it meandered. And by the way, why did it meander so badly into about 2 p.m. or 2:15 p.m.? Well, this is the doldrum, and that's why I like to trade the morning. And if you want to trade, you can go ahead and trade the afternoon as well. So if you want to start trading, but you don't know where to start, I can show you. I live in Boca Raton, Florida. And my favorite place is in Isla Morada. We travel here very, very, very often. And it's just like your personal GPS. So basically when I go there, do you think that, I'm just going through intersections, wondering whether I need to take a right or a left? No, I just go to my destination because I have my GPS on and it guides me all the way to my favorite place. And sometimes we go by boat, and you can see that sometimes I do still work on the boat. I still have charts here and I analyze, and yes, you trade on the go because trading is a lifestyle. It's not something that is static and boring. For me, trading is very, very, very exciting. I do a lot of swing trading and a lot of scanning on my boat. So 5-minute workday. You sometimes have instant gratification days like this, where you can have your targets achieved, boom, in no time, less than 5 minutes. You can see the text on the right-hand side, because when I'm sending you the recording, you can actually hit pause and you can go through every single detail of the trades that I'm pointing right here. So you can see it here. I'm noting why I'm bullish above, S&P bullish above, and the level. You see all these level right here. This is what I call instant gratification. These are the key zones, high risk, high reward. So there is no gain if there's no risk. So over here, I just typed in the room and I said, you know what? I think I'm done for the day, because this data comes in very early at 8:30 and we were done literally at 8:35. So that is instant gratification. So when you have a good grip on technical analysis, when you have a good idea of what's happening in the market, you know how to control price, and you know how to handle the price and how to handle the trade, where you put your stop, where you put your entry, how much you're going to be risking, where's your target, and how to react into each target, because this is very important. Okay, here's another trade example, as you can see here. So 52 points in 1 minute, that's over $1,000 per contract. And again, you don't take it with a standard contract. This is futures, and you don't trade standard contracts. For example, if you have a certain, let's say you have $25,000 in your account, doesn't mean that you're going to take one standard contract and you're just going to trade with one standard contract. No, we're not brain dead. Us futures traders are not brain dead. We're just like any other stock trader out there that needs to position size. So if you want to trade for a living, guys, no boss, no commute, no customers, no clients, no emails. It's just you and your computer. And I can teach you how to do all that. We do it every single day. I love my community. I think that the number one reason that I do have the trading room and what I do is teach traders how to do it, is because I love what I'm doing and I want to share. Don't want to keep it to myself. I just want to share my knowledge. I have invested so much in my trading education. It would be a waste not to teach traders how to, how to trade. Okay, sorry about that. This is the perfect time to learn how to trade your way to financial freedom. The market is so hot. It has been hot. And guys, even through the pandemic, it has been even hotter. Excuse me. The market is a permanent transfer of wealth from the novice trader to the very astute, educated trader. Why do you think that is? Excuse me. Why do you think that is? Because you have to be very educated. Excuse me. Okay, sorry about that. You have to be very educated when you're trading, because you're dealing with the hottest, most brilliant minds and high frequency trading computers on Wall Street. So you need to be really well prepared. Okay, I hope, sorry about that. I just choked with air. So why markets will remain volatile through 2024? Well, as you guys can see, the Russia-Ukraine saga is still continuing. We still have the war between Israel and Hamas. FOMC rate cuts. Are they still going to cut rates? Are they going to, what is going to be their decision going into 2025? We still don't know. There's still massive layoffs. And in fact, we do have one client that, one of our members that joined that was laid off. And of course, I'm looking forward to the trade wars. I don't know about you guys, but we made a lot of money through 2016 through 2020 under Trump with the trade wars. The market was extremely volatile. And it was the great volatility because it came with very heavy volume into the market. So bottom line is what you need to get started. And I want to emphasize this. You need to have a really solid, robust trading education. You need to have the discipline. You need to have the patience, focus, and repeat, rinse and repeat every single day. Rinse and repeat every single day. This is the secret sauce. You need to be at it every single day. You need to look at charts, even when you have a day off. Take a look at some charts for 5 minutes, 10 minutes, an hour, 2 hours. Look at charts. The more you analyze, the better you are going to become. Think about this. If you start analyzing one chart, and that is one single chart per day into the end of the year, in 1 year, actually, in 365 days, you would have 365 charts analyzed. Can you imagine the self-education that you can have just from analyzing? So why traders fail? Because a doctor needs about 7 years plus trading plus license to become a doctor. A lawyer needs about 4 years of school, law school, bar exam. A pilot, 3 years of school, trading plus license. An engineer, 4 years for trading plus P exam. But no, when it comes to traders, I want to become a trader, no experience, no trading. I'm going to start trading tomorrow. I'm opening a trading account and boom, right there into the market. So this is why there are so many unfortunate cases in which traders are blowing up their accounts. I was one of these, one of the traders that never blew up an account. And that is because I decided to get my education first and then get into the market. Okay. So I would actually, if I were you, I would stay away from traders that proudly admit that they have blown up accounts. And there are traders out there that pride themselves and say, hey, I blew up 5 accounts, but look where I am right now. Okay. That to me shows a level of recklessness. So what you need is basically to have a burning desire, how much you really want to make money. I needed to make money because I quit my job. So I really wanted it badly. And I was 100% focused. I was in front of the market around 7 a.m. every single morning. And I would work my way until 7, 8, 9 o'clock every single day around the clock for 2 years. For 2 years. To get to where I am right now, because I wanted to fast track my education. The education is your foundation, and it's going to help you propel and progress. Discipline, you need it because you need to follow the plan. Everybody in here should have a trading plan. And I'm not saying that you need to write an essay or you need to write a novel. It needs to be on a post-it. The time that you're going to be in the market, the setup that you're going to need out working, and the detailed setup, the detailed strategy that you're going to be using to achieve your goal every single day. You need to have patience to wait for the opportunity for the market and not just jump into a trade or have that FOMO, boom, yeah, man, it's going up. You see a big red bar, or you see 2 red bars and you go like, boom, I'm going to be short. Okay. So you need to have the patience to actually observe the market, look at the levels before you actually pull the trigger. Focus, no distractions. So when I trade, I basically have my office doors closed and that's it, because I'm only trading right now just a couple of hours. That's it. But I don't want any interferences. I don't want to hear a doorbell ring. I don't want to hear the phone ring. I don't want to hear anybody in my house talk. I don't even have a TV on into my office. I don't want any kind of distractions. Why? Because that is the time when I'm making my money. And we meet every single day in the trading room, Monday through Friday. And my number one goal when I step into my office is to try to find the best possible setup that could deliver profits into my pocket, into my account. I'm not coming every day and say, oh, I'm gonna make I want to make $500 today. And if it's possible, I want to make 1,000. This is so wrong. You need to rewire the way you think about the market. And when you come into the trading room and when you come into your trading space, you need to say this: I need to find the best setup that is going to be provided by the market today, and money would follow. You don't come into the market and say, oh, I'm going to make $500. No, you need to have the best setup. I'm not saying the $500 is bad. I'm just saying that the setup is the one that is going to deliver. The market, you need to understand, live and breathe the market. And of course, you need to have conviction. You can't have conviction if you don't have the education and perseverance. Just be in front of the market every single day. I focused on the futures indices, and these four guys right here that you see, the Dow, the S&P, NASDAQ, and Russell, these are my go-to. The rest of the panel represents swing trading because they are not day tradable at this point in time. They may become next year or maybe in 2 weeks from now or in a week from now, but they're not now. Trading is a rule-based system. It's about finding highest trades, waiting for the proper setup, find a precise execution. You need to have really good money management skills, not only in the sense of position sizing and determining risk and reward, but also your reaction into targets. What are you going to do? You're hitting target one. What do? You freak out and go like, I'm going to take all my profits because I haven't seen profit this week or last week. No, you need to have a system. What do? Do you sell half? Do you sell a quarter? What is your tolerance? How would it make you feel if the price turned around and gets you back into the break even or below the break even? So you need to, have a really good solid plan in order to be successful. And of course, mindset, right? Think big. I gave you a little bit of insight of how I'm thinking when I'm coming in front of the computer. So I'm not thinking, oh, today I'm going to make $5,000. No, today I am coming in front of the computer to find the best possible setup for myself and to share with my traders, because that's a big responsibility, right? I share my trades completely for my members, right? So what is the power hour? Okay, so let's, cut to the chase and let's talk about the power hour. So in day trading, the term power hour refers to the specific period of the day trade where you're getting a surge in trading activity and in volatility. So the combination of volatility plus volume is the best combination for price action to achieve targets, whether up or down. And there are two major periods. Not many of you guys may know this, but there's a power hour in the morning from 9:30 to 10:30, and there's a power hour at the end of the session, which happens between 3 and 4 p.m. That's right. The volume is somewhat equal to the morning timing. Okay, to the morning timing. So it's very important that you understand that, especially in the afternoon session when the volume is coming back in, right? The trend is already set. So if you're having an up day, the price action is most likely going to continue higher, especially after the doldrum 2-3 o'clock, and the price action is going to head on higher. I like to use this power hour for a different strategy because I don't trade it. I don't even trade it every month. Okay, so I don't trade the afternoons at all. I just focus on the power hour, and the results that you guys saw are just for the power hour. If I have a swing trade, I identify it in the power hour. If I have a day trade, I identify it in the power hour, so I don't waste my time. Okay, you have to do the things you love. And when I do love the power hour is basically the afternoon power hour is when we're having a massive down day. And when you're having the massive down day, look for a turnaround around 3 o'clock to 4 o'clock, especially if you have data that is coming out the next day. Traders do not want to sit, or even institutions do not want to sit in that short because they know that the price action may reverse and and they may get taken out of the trades, or they may choose some of the profits out. So what they do is they exit the trades, and some institutions take half out, quarter out, but their half out is gigantic, and they produce a massive shift in the market that rotates the price higher, and that is called the afternoon power hour ramp. Okay, so best times to trade, 9:30 to 9:35. I like to look at the market from 9:35 to 10:35, and that is when I find setups, because I'm not going to jump into the market at 9:30. I typically wait for about 5 minutes. If I see the first setup that I like in a power hour market, and a market that is dynamic, not like today, trades are setting in the first 5 minutes, first 5 to 10 minutes, because most of the volume is present within this interval. You get high volatility, plus you're trading basically the reaction of the news that was just out at 8:30 or 9:45. Worst times to trade. So when you should sit on your hands: before any economic news releases, before, right? So half an hour before, an hour before, especially around, let's say you have a FOMC meeting at 2 o'clock, or you have the beige book, or you have meeting minutes, or whatever you have in the afternoon. Typically the price action is going to start becoming super choppy from 11 o'clock to that time. Or if you're having data, for example, at 8:30, don't put a trade at 7 o'clock in the morning, because it's not going to go anywhere. Option expiration days, those are relatively bad for the market, and those Fridays are very tricky to trade. And of course, the last day of the month. Now, let me share with you my morning hybrid Elliott wave plus the timing. So this is very important when it comes to the structure. So market opens at 9:30, right? Sometimes you're noticing that when the market opens, the price shoots up immediately, And then if you have a strategy that is designed just like I do for the power hour, this is your best bet right here. It's one and done. You take one trade and you're done for the rest of the day. You don't even need to be in a market, because you've made your 1 hour, 2 hours, or whatever, or even if you lost, you're pretty much done into the market. And I would say here that if I have a first trade that I lose in the market, I am very careful to see if I can find another trade that could take me outside of that loss. And the timing for that, so if I have a trade that is that has stopped me out between 9:30 and 10 o'clock, I typically look for a 10:30 time frame. And again, here, sometimes you're having the chop, from 9:30 to 9:45. It depends on how volatile the day is. If you're having a very volatile day, then it could last until 10 o'clock. For example, if when we were trading in 2020, under the pandemic, this sideways range actually continued for not only for the whole power hour, but almost till 11:30 or so. I want to share some 10 ideas with you tonight. So these are some really important steps that you need to follow, and some key points. Number one, treat your trading activity as your business. Okay, I always respect my business. I never come in front of the computer in my pajamas, sipping coffee. No, I get dressed, I eat my breakfast, I go for a little bit of walk outside, and then I come to I'm coming in front of my computer. So respect yourself and respect the market as well. Number two, trading should be a rule-based, very boring system. If you're feeling like, oh my God, I just made money, I know you can get excited when you make money, but you go like, oh my God, I just lost money, and you feel like depressed. I mean, there's something wrong. Trading should be boring. You lost 1 hour. What big deal? Like that little hour is just an ocean. It's just a little drop in an ocean of trade. So that really doesn't count. It's 1 freaking hour. That's 1% of your account. You can make that in 5 minutes. Number three, focus on the strategy and not on the P&L. This is very important. Focus on your chart. Don't trade your P&L. Okay, trade your strategy. Number four, no egos and no crying in trading. Okay, so just like I said, mindset is everything. Trading 1 day at a time. And this is not a get rich quick scheme. You have to keep at it, and you build on what you know, and you build upon that. Number six, have a well thought process, because everything is a system in trading. Number seven, love what you do and trade for the right reasons. Because if your neighbor told you, hey, I got into day trading, it's going good for me, I'm making this and that, you go like, oh yeah, I gotta get into trading as well because I need some money, but I freaking hate it. Don't do that. You need to really love what you're doing. 8, have a winning mindset. Don't have that welfare mentality when you're trading, right? You go like, oh my God, I have a trade, I lost, I have 2 trades that I lost, I have 3 trades that I lost, and you get all discouraged and you get so depressed. The bottom line is like you start bitching about, how awful trading is and all that stuff. Then it's not for you, okay? But have a winner mindset, have a millionaire mindset. What is that 1 hour, 2 hours, or 3 hours? Do you think that's gonna be like the whole drawdown of your entire life? Remember what I said, you need to be 40% right in order to grow your trading account. And always improve and always study. I always improve, I always study, I take on new methods. I take on, let's say if you're really good at what you're doing right now, you're excelling in day trading and swing trading and whatever, take on options or take on a different instrument like Forex or what have you, and you're going to always improve yourself and always reward yourself. It's very important to reward yourself. Take some money out, buy the card that you always wanted, buy, I don't know, whatever you wanted, so you're happy, because when you're happy inside, you're happy on the outside. And lastly, patience. Patience pays. You don't have a setup, you don't have a trade, you don't have to trade every single day, even if you're a day trader. So now I'm going to take you very quickly. I have a special offer for you guys right now, and if it's okay with you, I'm going to share the details on this super mega offer. We've never done this before, and we will never do it again. And I promise you, never do it again. And it comes from me. We do not offer discounts on our trading rooms, on our services, because we are high end. You never see a Chanel bag with a 50% price tag, 50%, or you never see a Gucci on clearance. You never see that. And this is the way you should look at this course as well, because this is not something that, comes, every single day, or you're going to get it now for this price and 3 months later, you're going to see it at half the price. We never do this because this is a high-end product. This is a professional product. This is actually everything that I know about the market and from my best mentors, as well as my personal experience of over 25 years. So not only that you're buying into the course on how to educate yourself, but you have me for 90 days or even more if you decide to stay with us through the trading room. But this is a 90-day Power Income Futures Trading Course Masterclass, and we're including for the first time ever the Swing Trading Course for Futures for free. That's right, you heard it, for free. We sell it. If you go to our website, we have it listed for $4,900. I think it's $400,097 actually that we sell it for. But for this December class, because we wanted, this was an incredible profitable year for myself, and it was an incredible profitable year for our members, and we want to share the joy of making money. We want to teach you to make money because we love money. We want to teach you how to start loving money as well. So this is the December class only. We're going to have and I have just announced it. It premiere right now because we have never announced this before. So the Day Trading Power course is going to be live December 16th through the 20th. And I was going to provide the recordings from the futures swing trading class, but I had a change of heart. And I said, you know what? I'm going to do it. So I'm going to be spending my time to teach you how to swing trade live. And that is January 6th through January 10th. So first off, we are starting off with day trading, and we're continuing with swing trading live. So we have 2 weeks where you're going to be learning in a live classroom online. It's going to be online, but it's going to be on a live market environment. And you're not only that, but you're going to have access to the trading room until March 31st of 2025. So if you decide to sign up today, sign up now, you're going to get into the trading room tomorrow. So you're going to start being in the trading room starting with tomorrow, but you won't have access to class or manuals or anything else until the course date. But again, this is the biggest surprise, and this is the biggest announcement that we're going to have the Power Income Futures Trading course live December 16th through the 20th. And we're going to have the future swing trading course live with applications, with charts, with case studies, with everything. And that's going to be January 6th through January 10th. So if you're ready to jump in, I'm going to give you, and I'm going to provide you guys the link in just a second. But what you're going to be getting with this course, you're going to get lifetime access to Power Income Futures Trading course live class, where we take you from zero to hero, from student to pro trader. This is amazing. Why? Because typically, not typically, but 99.9%, when you're getting into a live class and you could actually shop around and see, you're always getting that class and bye-bye, see ya. No, with us, you're having the lifetime access to the Power Income Futures Trading course. So what does that mean? If we decide to do a course at the end of January and to repeat the Power Income Futures Trading course in January, you're going to be reinvited to the class. Why? Because repetition is key. You're not going to get it all in one shot. There's an awful lot of material that is being provided. We have a manual that has over 650 pages that you're going to have access to. It's an e-manual. Guys, 650 pages manual where you're getting your education, your strategies, your trading plans, and more. Yep, that's what I said, trading plans and more. You get a limited live retake. So every time we do a live retake, you're going to come in and you're going to say, oh, okay. So we have traders that have taken the retake, and these are the most successful traders that actually literally gave up their jobs, quit their jobs to become a day trader. Why? Because they're successful and they started making money while they were working, and they said, like, you know what? I'm making more money trading than I am doing at my current job. I quit. You're also going to get 3 months access to the futures trading room till the end of March. You're also going to get a private X feed where, you know, if there's a trade that happens right now in the overnight, I'm going to be sharing that idea with you guys. You get platform layout. Remember at the beginning of the session, I was mentioning that you need to have a certain layout in order to be successful, and you need to have all the time frames so you can see this and that. We're providing you the platform layout, and this is for the Schwab platform, for the Thinkorswim. However, if you are using a different broker, you could actually customize it. We're sending you snapshots the way the windows are set up, the platform is laid out, and you're going to be able to replicate it on your side. You get student personal support every single day. You're in the trading room. You can ask me unlimited questions. You get access to a risk sheet. You guys saw it. It is so easy to calculate your position sizing with that. And now, like I said, for the first time ever, you're getting access to the futures course for free for futures. It's insane. It's an insane value. It's over $36,000. If we would sell everything separately, it would be over $36,000. And now you guys are actually having access to everything for only $59.99. That's it. That's it. And you have access to everything, the retakes, the recordings, the futures swing trading course, future swing trading course. I mean, this is insane. Plus the trading room for 3 months. So if you add it up and if you divide it, right, it's about $16 a day. Now, how many times you guys go to Costco, right? I'm pretty sure Costco, Sam's Club, you go to the supermarket, you go out of the house, right? And you go like, oh, I feel like having a cappuccino, and then I feel like having, I don't know, some Chick-fil-A, and I feel like having this and that. You spend more than $16 with this inflation per day. And this is an investment in yourself where you're going to be reaping the best return on your investment, which is basically going to be your profits. You're learning a high income producing skill. There's nobody going to take away. It's just going to get better and better. So you guys are ready to sign up. I'm going to share with you the link, and I'm going to put it right here. Okay, so if you guys want to enroll, like I said, you could go to this link right now, and you could actually tap this button. You can read all about it right here. You can tap this button and join. This is going to be the last class that is going to have the swing trading course for free. Other than that, if you want to learn how to swing trade futures, you would have to pay the price. So it's going to go back to $4,997, and that's going to be 5-day live, and it's going to be a totally separate class. And then you're going to have the Power Income Futures day trade course, and that is going to be for $5,999. So if you add it up, with everything that we're providing, with the manuals, with the on-demand videos, with the retakes for free. I mean, this is a production. This is so expensive to host on my side. So I'm carrying a lot of the cost in here. And to be able to have access to all the information that I have about the market, to be able to trade confidently, to be able to trade stress-free, to be able to put emotions aside, this is unbelievable. So if you guys are ready to jump in, you are actually, the link is ready for you. And the link is right there, posted in the room. Just hit click and I'm ready to start trading with you guys. So this is it for tonight, everybody. And I hope you guys had a really great time. Yes, you do have it, Sylvia. Yes, Sylvia, you have access. You have access to it. Okay. All right. All right. Dusko. Okay. Some questions when you say, my traders who are with me at 8:30 a.m. Are they traders who passed the J trading course? You mean in the trading room? Live trading room starts at 9:30. No, these are just very few times when we have the CPI or the PPI data, and we haven't had it. We haven't traded the last two editions because the market conditions were not appropriate for these types of trades. You cannot trade every CPI or every PPI. You have to have the market context. All right, so I hope that helps. Of course. All right, so thank you so much, everybody. I hope to see you in the class very, very soon. We're going to be starting in December, actually 2 weeks, almost 2 weeks, not even a week and a half, let's say, on the 16th. So thanks so much, everybody, and I'll see you guys in the trading room, or I'll see you guys in the course. Bye, everybody.